Were you pretty much expecting this cooling in the last couple of months, given the huge surge that we saw in the fourth quarter, or is this an abnormality?
No, we were definitely looking for some payback to an incredibly strong Q4, where it was up 3.8%. So the momentum was destined to fade from that type of figure or that type of growth rate. We are a little bit surprised that it's persisted this long into February. So now we had 3 declines in a row. We were looking for softness, but this is 3 modest declines, but outright declines in a row on the monthly sales. So it's a pretty sharp slowdown for the consumer.
So, Stephen, what's going on? I mean, people got the boost from the tax cuts, right? Are they saving that money? I mean, why isn't it feeding through into an increase in retail sales?
Well, yeah, I think you said it right there. They're saving some of this. So we had some really strong consumption in 2017 and even 2016. But we saw the savings rate plunge from nearly 6% to 2.5% by the end of 2017. So in our mind, the tax cut was very important to sustain the consumer and allow for the savings rate to pick up a little bit. And we saw that. We saw the savings rate climb again in January, so we have the news there, and we'll expect a little bit more of a climb in the savings rate in February with these types of figures. But overall, it's just after a 3.8%, we're very likely to get the consumer in at about 1.5% here in the first quarter of this year. You average that out, you're still somewhere about 2.5% for the consumer, and I think that's the right run rate. It's healthy, it's the right run rate, but we're just experiencing that payback.